Hello, everyone. Thank you for joining us on this Wednesday, and welcome to the Specialist Trading Educational Presentation. Now, today I want to talk to you about two methods to help you succeed in the market. And this really pertains to any market. You could be trading currency pairs, futures, Bitcoin, commodities, or the stock market, and it doesn't matter what time frame. These are two methods that I learned roughly about 4 decades ago on the floor of the Pacific Stock Exchange, and I continue to use in my own personal trading. Let me share with you an example of how powerful these simple methods are. For example, if we look at this chart here in Costco, now the way most traders would analyze this chart, this was just about a month ago, they would say, well, we're in a whipsaw market, Steve. This is where you buy, and then the minute you buy, it goes down, and the minute you sell, it goes back up. So really don't want to do anything here. And on top of that, there's probably some resistance. Maybe you took that $15,000 course that tracks the institutions or the big buyers and sellers with all the big bucks behind them. And you say, you know, they're selling up here, so I don't want to buy anything. I think I'll stay out of this, or I'll wait till a breakout occurs. Well, with these two methods I'm going to be sharing with you today, the first method generated a buy signal. Where you thought there was a whipsaw market and where you thought there was actually some type of resistance, a buy signal was generated right here. And then the second method confirmed that signal, because some of the signals are better than others. So we want a filter, something to filter out what the best trades are. So at this point, you knew that this was a high probability trade. And potentially in the next 3 or so weeks, you could have potentially captured 30 points. Now, when I first learned these methods, like I said, 4 decades ago, I had to calculate everything by hand, and I had to really look and study everything because, 40 years ago, we didn't have high-speed computers, we didn't have programmers. But here's the good news. Everything is one click away now on the PTS Primo Charting Platform. This is the educational platform that teaches you how to trade with these two very powerful methods. So this is what we're going to be talking about today. You're going to see how simple it is to apply these on our platform and how simple it is to actually elevate your trading with these two methods. So welcome once again to this educational presentation. My name is Stephen Primo. I'm the president and founder of Specialist Trading. I formed Specialist Trading about 12 years ago with Pro Trader Strategies. One goal in mind, and that was simply to educate traders. So if you've come here today thinking that I'm going to give you my opinion about what I think the markets are going to do, or what I think the best stock is to buy or sell, or what I think the best time frame to trade is, you've come to the wrong place. That's not what we do here. Our goal as an educator is simply to teach traders how to trade. Now, as I stated, I've been trading for 44 years now. I started my career on the floor of the Pacific Stock Exchange. I was on the floor for a total of 16 years, and 9 of those years I was a specialist. That's where we get the name Specialist Trading. Specialist isn't someone who's more special than any other trader. It just means that you specialized in making markets, roughly about 50 or 60 stocks. So if you wanted to purchase or sell a particular equity, you had to go up to the trader, or the floor broker would go up to the trader who specialized in making a market. So I did that for 9 years. I traded US Air, IBM, Reynolds Metals, Beverly Enterprises, a lot of different stocks that are still around today, Waste Management. And I traded during the crash of 1987 and the bull market that followed. So I've seen and traded just about everything there is imaginable under the sun, straight up markets, straight down markets. Any method or system or new technique that you think is brand new, that you saw some webinar talking about, it's probably been around before, just been rebranded or updated. So I know what works in terms of consistency, and I know what doesn't. So that's what we do at Specialist Trading. We simply teach our students around the world in over 115 countries in every state in the United States what works, what has shown high levels of consistency, so that our goal is to put the power back in your hands so that you can ultimately make your own trading decisions. That's our goal at Specialist Trading. That's my goal as a mentor. So you'll see that attention to detail in today's educational presentation. But once again, we are always required first to share this with you. So please take a moment to view our disclaimer. I'm going to show you a lot of performance results using these two methods. But please remember that we can in no way guarantee that any of the results I'm about to share with you will be repeated in the future. Also, please remember that all examples are strictly for educational purposes only. Now, students are always asking me, Steve, where can I get more education? Well, on a daily basis, I post different educational information on Twitter. So please feel free to follow us on Twitter if you haven't done so already. Every day I post about 4 or 5 different little bits of either financial wisdom or signals our strategies have generated, and go into detail a little bit about why they were generated or what was the method that was used to generate those signals. So lots of great free education. Please feel free to follow us on Twitter. Now remember, we are first and foremost an educational company. That's our only goal. We're not here to tell you what we think of the market. I'm not going to have a signal service or a chat room on my website, because those things actually keep you from your success. Once you start relying on someone or something else to tell you what to do or how to trade, that's when you start going down that road of inconsistency. Why? Because you're taking yourself out of the game. You go to a chat room, you go to a trading room, or you read a blog, or you wait with bated breath for the earnings to come out, or for some jobless number, or you listen to the guys on TV after the market closes and find out what they like or what they don't like. See, this is the way we're all trained, myself included, because we're all trained to take ourselves out of the game and blindly follow along what someone or something else says to do. And that's really wrong. That's why most traders fail. In fact, it's been estimated 80 to 85% of all traders fail. So if this works so well, why do so many traders fail? Well, obviously, it's because it doesn't work. The only traders who have stood the test of time in my trading career are the ones that make their own trading decisions. These traders, don't read blogs. They don't worry about earnings or interest rates or jobless claims or listen to guys on TV. They make their own decisions based off their simple plan. And that's why they're still trading today. So obviously, that's our goal, to get you to the point so that you can make your own trading decisions. That's why we're not a signal service. That's why we don't have chat rooms or trading rooms, because we feel that would be a detriment to your success. That would be getting in the way, and you would use us as a crutch to basically make your decisions. I want you to study, to learn, and then be free to make whatever decision you want. That, in my opinion, is the only way one can become a consistent trader. So as you see here, my goal is not to force feed you signals or tell you what I think the market's going to do. My goal is simply to teach you how to trade with a specialist edge. Now, when I was really struggling 4 decades ago, when I first started trading, my mentors had the same concept in line with me, and I fought it all the way. I said, why can't you just tell me what you're doing and I'll just piggyback off of your trades? And they said, well, no, because you'll never be a consistent trader that way. You'll just rely on us to tell you what to do. And I hated it at the time, but now I'm so glad they did that, because now here I am 44 years later still trading. So this is what my goal is for all my students around the world, to instill that same concept. That's the specialist edge. Now, I'm going to share with you these 2 methods today that are highly consistent, and they're probably some of our most, I would say, popular methods at Specialist Trading and Pro Trader Strategies, my sister site. But before we begin, remember, I want to take your questions, but I'd like to take them at the very end. We have a good crowd here today, so I don't want to take all of your Wednesday up. I know you maybe still be trading or doing other things. So please, if you have a question, wait till the end of today's class. The only question I answer in the beginning is this one, and that is this being recorded? Yes, it is. All of our webinars are recorded, so if you have to leave early or if you're having technical issues, many times if you just log off and then log back on, your problems will be resolved. But if not, don't worry. Each and every one of you will get a link to this recording so you can watch it at your own leisure, okay? All right, with that stated, let us begin today's educational presentation. I'd like to start off by sharing with you something by my mentors, or what they shared with me some 4 decades ago, and that is Steve. They said, Steve, the market you're trading, regardless of the time frame or the direction, tells you everything you need to know. Now, I heard these words about 4 decades ago, and I fought them tooth and nail the whole way. I said, how can that be? I mean, what do you mean the market's telling me? I thought the interest rates are telling me, or I thought the earnings are telling me, or I thought, the volume was telling me. And they said, well, you're listening to the wrong things. We have to learn how to listen to the market. Unfortunately, as I said earlier, we're all trained to do the opposite. We're all trained from the beginning to listen to some guy in a trading room or a chat room, or to listen to some guys on TV, or to listen to some earnings report or some jobless claim. We're all trained to find out that that's what's going to tell us what the markets are going to do. But unfortunately, once again, there's no consistency in that. Those things are too subjective. All right, we want things that are cut and dry. So here are 2 methods to help you listen to the market. And these are 2 of our most popular methods. The first one is strategy 4. This was actually the very first strategy my mentors taught me. I still use it today in some capacity in my own personal trading. And let me go into some of the highlights of this particular method. It's a pattern recognition strategy. It's not an indicator-based strategy. It's based solely off of a pattern that repeats itself over and over again. Now, it's not a very difficult pattern, but it is something that you must learn. And after, a little practice, you'll be able to see it all over the place. This pattern repeats itself over and over again in any market and any time frame. The only trouble is you have to study enough to be able to find it. Now, it's designed for traders looking to catch momentum. And one of the beautiful things about Strategy 4 is this pattern will generate itself even before momentum starts. So many times when it looks like you're in a sideways market or nothing's happening, well, that's when this pattern will identify either a buy or sell signal. You see, it spots this buildup of momentum many times before momentum even takes place. Now, it only uses one indicator. That's why it's a pattern recognition strategy. Now, I'm going to share with you what that is. I've said it before, it's the 50-period simple moving average. We call this our buy-sell line, right? Because we use it differently than the way most people use moving averages. We don't use them as a crossover to tell us when to enter or when to exit. This is just putting us on the right side of the market. So the way this works is if price is above, or you see this pattern above the 50-period moving average, well, then you can only use this pattern for a buy signal. Conversely, if you see this pattern below the 50-period moving average, you'll only be able to use this as a sell signal. So to put it bluntly, you will never be buying below the 50-period moving average, and you will never be selling above the 50-period moving average. Why? Because over time, that's how you get this level of consistency. Remember, consistency does not mean you're going to have a winning trade every time. There will be losses. But being a consistent trader is a 2 steps forward, 1 step back process. It's about, sure, experiencing a loss every now and then, but being confident in your method that it's able to recoup that loss many times on the very next setup. And I'll share a couple of examples of this in today's presentation as well. So strategy number 4 is a highly consistent method, but we are aware that there will be losses from time to time. Let me show you some examples, all right? These are older examples just so you can understand what it looks like. Now, I know a lot of you are probably saying, well, Steve, what's this pattern? Can you teach me what the pattern is? I would love to. Unfortunately, that wouldn't be fair to our students around the world who already own this strategy, or students of mine, if they all of a sudden found out that in a free Wednesday afternoon webinar, I was giving away the entire rules. So basically, what I can tell you is the 50-period moving average, we were only going to be buying above and selling below. So let's look at this example here in VRSN, all right? Once again, most traders looking at this would say, well, what's my analysis here? We're in a range market, okay? So I don't want to get involved in this. There's nothing happening. For all I know, this could be in a range market for a year. So I don't want to do anything until it breaks out one way or the other. Or maybe I'll wait for the earnings to tell me what this is going to do, okay? You see how I'm making my decisions based off of outside sources. Not what the market's telling me, but what something is telling me about the market. But what's the first thing we do? We apply the 50-period moving average. And we ask ourselves, well, where is price in relation to that? Price is above. So this means that we're only going to be a buyer. Now, we still don't know if we're buying yet. We have to find that pattern. But we know that we're not going to be a seller. So that automatically eliminates half the decision-making process, right? You see, this is how you become consistent. You're making your own decision. You're not relying on the earnings or not relying on support resistance to tell you what to do. This is simply the market telling you what it wants to do. And right now it's telling me that the overall trend is up. So I'm just going to be a buyer. I'm going to look for this pattern as a buy setup. Now, guess what? Here's where the pattern took place and a buy signal was generated. So here's a strategy number 4 signal. We're above the 50-period moving average, and all of a sudden that momentum kicked in, 20 points. Now, what happened to the range market? What happened to the earnings? You see, when you stop listening to those things, trading becomes a lot simpler. You don't have to overcomplicate things. The market tells you just about everything you need to know. Unfortunately, we've never learned how to listen to the market. Well, that's my goal, to teach you the simplicity of listening to the market. All right, let's look at this example here. Let's say you say to yourself, well, Steve, I took that $10,000 course on support and resistance on the institutions. You know, that's where the big bucks are. And they love this stock right here. Look at, it won't go below this support line because they're buying right there. All right. So that's my decision. I want to kind of buy it when it gets down to those lower levels. All right. Once again, my decision is based off what someone or something else is doing or telling me. But what do we teach you at Specialist Trading? First thing you want to do is apply the 50-period moving average. Now you ask yourself, where is price in relation to that? Price is below. So I don't care where, some institutions are buying. In fact, I've said this many times before. When I traded on the floor, I used to trade with the institutions. They would give me orders in my book to place an order to buy 1 million shares, 2 million to sell 1 million, and they had probably some of the worst statistics and track record of traders I knew. So I wouldn't trust the institutions, with a 10-foot pole. So what should we trust? Trust the chart in front of you. All you have to do, the first thing is apply the 50-period moving average. Ask yourself, where is price in relation to that? If price is above, well, then we're going to be a buyer. We're going to look for that pattern for a buy setup. But if price is below the way we see right here, we're not going to buy anything. We're not even going to consider buying anything. We're going to look for that pattern as a sell setup. And guess what? There it is right there. That's our sell signal. So where everyone else was saying, well, Steve, you can't go against the institutions. This is where I'm buying, right where they're buying. Well, how well did that work out? Okay. Now, the beauty of strategy number 4 is that if the trend is strong enough, you will get more and more signals as the stock, the future, the currency pair continues along in that trend. So don't ever worry if you miss one, because if the trend is strong enough, there will be more signals generated. Okay. Now remember, consistency. What does consistency mean? It does not mean, first of all, that every trade is going to be a winner. Consistency means that you will have losses from time to time. It's an awareness of losses. For example, let's look at this example in SIX 6. All right, let's say you became a student of mine and you studied the material and you said, you know what? Okay, I'm ready to trade. I really like this strategy. I like the teaching. I like the different concept. It's different from anything I've ever heard before. And here's my first signal. So I'm going to sell this. I'm all excited about this, okay? And then this happens. Now, I've used a very tight stop that we teach you. We teach upwards of 6 or 7 different stop placements. But let's say you use the most conservative one. You most likely would have been stopped out here for a small loss. But let's say you decided to stay in. You say, well, you know what? Maybe I'll stay in. We're still below the 50-period moving average. And then guess what? Another sell signal is generated. So you do what we call doubling up. You decide to double up and say, well, gosh, now I'm really going to make a killing because I sold short more, maybe I bought more puts, whatever. And now you're all excited thinking, now, boy, I'm really going to make it. And then now it goes up even higher. And on top of that, what do we have? 1, 2, 3, 4, 5 closes above the 50-period moving average. So we're not even supposed to be short anymore. So you take a loss, a bigger loss, and at this point you say, gosh, this isn't working out the way I thought it was. Now, I spent, some good money on this, and all of a sudden my first 2 trades are losses. So you're willing to give it some more time. You continue to watch this stock, and then a couple of weeks later, guess what? 2 buy signals occur right here, and they're above the 50-period moving average. So you say to yourself, okay, well, I'm going to make back that money I lost. So this was supposed to go up the entire time. I was just a little bit too early, and now I'm going to buy. So now you bet the farm, and then this happens, okay? At this point, you're calling for a refund. You throw your computer out the window. You're telling all your friends that this stuff that Steve Primo taught doesn't work. It's terrible, right? That's the way it usually happens. Remember, there will be losses, but what we need now is a filter. What we need now is a translator. Something to tell us, to give us a higher level of consistency, to tell us whether we should take a signal or not. So this brings us to the second method, the PET-D. This probably is our most popular method at Specialist Trading because of its versatility and it's so simple to use. It's a confirmation tool. It has dozens of ways to apply it, but we're going to use it in this context as a confirmation tool to confirm the signals that strategy number 4 is generating. So how do we do that? All right, so let's look at this older chart in Adna. Obviously, it was going straight up, and then all of a sudden, just went straight down. This is where traders usually lose everything because they're feeling confident, and then the trend changes. So what the PET-D does, it applies its very, very sensitive formula to any chart, any time frame, and it colors the bars. If you see a series of green bars, it's telling you that the trend is up. But if you see a series of red bars, it's telling you the trend is down. Now, it's not a predictive tool. It doesn't tell you how high or how low something will go. It doesn't get you out exactly at the top or get you in exactly at the bottom. But look at how sensitive this is. We knew well in advance when the bars were first green that we were going higher. And we knew well in advance before it bottomed out that it was going lower because the bar started to turn red. So as it says here, the beauty of the PET-D is that it tells you which direction you should be trading. And this is extremely sensitive. This is more sensitive than the 50-period moving average because it's of a trend detector on the short term. But once you know, you can confirm if your strategy is in sync with that short-term direction. Okay? So when we combine the PET-D with strategy number 4, we have one of our most popular packages. This combination is called the dynamic duo because it's such a dynamic duo of trading. You have a very high probability strategy, and then you have a very sensitive confirmation tool. When you combine those two together, it's extremely dynamic trading. All right, so here are the rules for trading the dynamic duo. Only trade strategy number 4 buy signals that are colored green by the PET-D. Now, when we say buy signals, when you get a buy signal strategy number 4, you're going to get an up arrow on our platform, all right? And that arrow will be right below the setup bar. That's when all the requirements come into play and the signal has been confirmed. But we also want to confirm that with the PET-D, so that bar must be either colored or outlined green. That will mean it's okay to trade. Now, conversely, we're only going to trade strategy number 4 sell signals that are colored red by the PET-D. So when you get a sell signal, you'll see a red arrow directly above that setup bar. That's where all the rules and requirements come into play. That bar must be colored or outlined red. If it is not, you don't take the trade. Same thing with the buy setup. If it's not colored green, don't take the trade because most likely it's not a high probability setup. So let me show you how simple it is to apply this process on our platform. We specifically designed it to make it simple. Why? Because everything is one click away and you can check your work. It's just almost like having your own personal mentor sitting right next to you because you can check to see if you've properly identified a strategy number 4 signal, and you can automatically check to see if it's been verified and confirmed by the PET-D. This is the educational platform that actually teaches you how to trade the dynamic duo. All right, here's an older example in APA. Okay, now let's say you have studied, once again, the process. You've taken my course, you've sent me questions, you've really learned what it means to identify a valid strategy number 4 signal. And you think there are a number of them right here. So the way to check your work is on our platform. Click on strategy number 4 right here in the upper green strategy tab. Click it on, and in the drop-down menu, you'll see all these categories here. Just click on signal arrow. That's going to tell you if you're in line with where you see an actual setup. Now, there are a number of them right here. Let's say each time you saw one, you clicked it on and you were correct. Now, some of these are better than others. As you can see, like this sell signal worked out great. This one didn't. This buy signal worked out great, and these buy signals aren't really doing anything. So looking back in hindsight, how could we have filtered out the good ones from the bad? That's where we apply our second method. This is the PET-D. Once again, we make everything simple for you. You know, when I was doing this 40 years ago, I had to calculate everything with a handheld, calculator and write it down on a piece of paper and add and subtract. Well, guess what? All you have to do is click on PET-D and it automatically changes the colors for you. So remember, what are the rules again? If we get a sell signal, it has to be colored red. If we get a buy signal, it has to be colored green. So as we see here, the first signal, the bar below it is colored red. So that's a valid signal to take. And guess what? Potentially you could have captured 5 points to the downside. And remember, we teach you upwards of 7 different ways to exit. So it's up to you which one you want to take. Remember, our credo is you make your own decisions. Our job is to provide you with that information so that you can do that. So we have roughly 7 different ways to exit. Now, we have another sell signal right here. Now, in order to take this one, according to the dynamic duo, that bar below it needs to be colored red. What color is it? It's green. So what is the dynamic duo telling us? Do not take this trade. And guess what? We didn't have a loss there. Now, we get a buy signal a week or so later. In order to take that, the bar above has to be colored green. And what color is it? It's green. So potentially you could have made upwards of 8 points, right? So now, on balance, you could have potentially made 13. Now, I know a lot of you are saying, well, yeah, but that means I would have had to sell at the top or buy at the bottom. Okay, let's say you didn't make 13. Let's say you only made 10. Let's say you made 5. you're still very consistent. You're bypassing all of the losing setups and making the good ones. Now, as we go forward, we see we have a number of buy signals, a cluster of buy signals. All right? And nothing is happening. In fact, the stock is kind of going sideways to lower. But that's okay because we would not have taken any of them. They're all outlined or colored red. So we didn't take any of these signals. And look what we bypassed. You see how the PET really confirms whether we should be taking these or not? As my mentors taught me, some of the best trades are actually the ones that you never take. So the PET will keep you many times out of these bad situations and will keep you in the good ones. Now, is this guaranteed to happen every time? No, nothing is guaranteed to work that way. But we've just increased your odds for consistency tremendously by applying the dynamic duo. So you see the value of this. You see the importance of this, of listening to the market. And you see all of these examples. Have I mentioned anything about support and resistance? Or did you see anything here included about volume or about earnings? No, because those things only serve to overcomplicate your trading. They're too subjective. How many times have you seen great earnings or great news about the market or great news about something and the stock or the market goes straight down, right? Or vice versa. So we need things that are more cut and dry, like either a red colored bar or a green colored bar, like either seeing a pattern or not seeing a pattern. We need things that are black and white. We don't want subjectivity in our trading. That's what makes us lose. All right, so let's look at some recent dynamic duo signals. Most of these happened within the last month. Some of these happened within the last couple of days, okay? And then once we get to the end here, then you can ask me any questions. I know a lot of you may be having questions. Remember, if you joined us late, we have a good crowd here today. Just wait till the end, please, to ask questions, and I'll get to all of them. All right, so let's look at that first example we shared with you, Costco. Remember, we said, well, Steve, this is in a whipsaw market. You know, every time I buy, it goes down. Every time I sell, it goes up, and vice versa. I don't want to be involved in trades like this. Well, sure, if you look at it that way, but remember, we're always taught faulty, inconsistent information. This is really not a whipsaw market. In fact, if we check with strategy number 4, click on the signal arrow, you see that a buy signal was generated here. This means we're above the 50-period moving average. In other words, all the rules are already pre-calculated. Now, remember, this is not a black box. You know exactly what constitutes a strategy number 4, buy or sell signal. But you want to be able to check your work. That's how you know you're doing it on your own. And by simply clicking on the signal arrows, you'll be able to see if you're in line. So let's say you had calculated that there was a buy signal right here. And by applying the arrows, you're right. So you're learning how to identify on your own. You no longer have to rely on someone or something else telling you where a signal is. You're starting to learn how to take charge of your own trading. Now, this is a good signal. But we want to take it up to the next level. We want to confirm it to see if it's a high probability signal. So what we do is apply the PET-D. Click that on and see what the colors are. Now, here's where most students have difficulty. They say, well, Steve, there are some red, there are some green. So isn't that kind of confusing the issue? No. The only bar we are concerned about is the bar directly above the arrow. We don't care what all the previous bars were. We don't care what all the bars that are following are, what color they are. All we care about is the bar that is directly above the arrow. And what color is that bar? It's green. So that's a confirmation that this is a high probability dynamic duo setup. And that's all you needed to know. And the stock went up 30 points. Now, once again, we teach you ways that you could have potentially gained 30 points, or if you wanted to be in and out quickly, you maybe would have only made about 5 points. We have roughly 7 different ways to exit. We teach you all these things. So you have to pick what fits your temperament. I personally was trained to get in and out of trades quickly because that was the way we traded on the floor of the exchange. We didn't hold positions overnight. So that's the way my temperament is. I like to get in and out quickly, and I like to, move on to the next one. Now, that might not fit your style. So who am I to say that you should trade that way? That's the way I was trained. That's the way I like to trade. You may like to say, well, I want to be in a trade 2-3 weeks. I want to get as much bang for my buck. So then that's the exit you should use. You should never copy or mimic what someone else does. That's why so many students fail. Even though you may go to a chat room, a trading room, and even though it may be a profitable signal, if it doesn't meet your risk parameters or the way you sleep at night, you don't feel comfortable with that much position holding overnight, you're not going to make any money because you're going to not follow the rules and you're going to second guess yourself. So you should never take yourself out of the game and simply follow or mimic what someone is doing. This was the same process I wanted to do with my mentors, and they said no. It took me years to finally understand that they were giving me the right answer, because you have to find your own way. Now, the good news is we provide you with dozens of ways to make entry points, exits, and stop placements. All right, let's look at TCOM, all right? TCOM, that's Tripcom Group Limited. Obviously, this is in a downtrend, right? Coming into the middle of June, just a couple of weeks ago. Now, someone would say, yeah, but Steve, I have that indicator I spent $5,000 on, and it's really oversold. I mean, it has never been this low before on the indicator. I've got to be a buyer here. And on top of that, look at this. I also studied candlesticks in that class I took, and this is a hammer reversal pattern. This is extremely bullish. So we have an oversold indication, and then we have a hammer at the bottom of that downtrend. I've got to step in here and buy. Once again, you realize all my justification is based on faulty, inconsistent ways to trade. There is no consistency in any of that. First of all, we have to see where the market is. What's it telling us? The beauty is this is all included in the strategy number 4 signal. The 50-period moving average line and the pattern, it's all there. So let's say that, once again, you're studying the strategy number 4 setup. You think you see a signal, or maybe 2. Click on signal arrows, and you're right. There are 2 sell signals right here. Now, who are you going to listen to? That guy in the chat room, or that that hammer candlestick pattern, or the market? Well, I personally would listen to the market, because that's what I'm trading, right? So the market's telling me it wants to go lower. Now, if I'm still a little bit squeamish about this, let's see if it's a high probability trade. So let's add the dynamic duo, that meaning the PET D. Click on PET D. And yes, even though all the bars are red, we're just concerned with the bars below the arrows. And they're both red. So this is a high probability dynamic duo setup. And look what happened coming into last week. So what happened to the, oversold? What happened to that bullish candlestick pattern? You see, there's no consistency in those methods. Take it from someone who traded those things 4 decades ago. They didn't work then. They're not about to miraculously change and start working now. Sure, they'll give you some really nice setups every once in a while. But, they're going to give you a false sense of security. If you do them over time, you'll most likely give back everything. Here's an example in Microsoft, okay? And someone's saying, well, Steve, how can I make a judgment based off, what do you have, 1, 2, 3, 4, 5, 6 bars? There's no way I can make a judgment. I have to know what the jobless claims are. I have to know what that guy is saying in a blog, or I have to, look at the direction of the company. I can't just make a decision. This is the way most traders make their decisions. But once you listen to the market, you don't need that much information. It's so much simpler. Trust me. It's like taking a big weight off your shoulders. You say, gosh, you mean I don't have to look at that stuff anymore? You don't have to. You don't want to. I stopped looking at news. I stopped looking at all that stuff that most people look at 4 decades ago. And if I'm still here, I'm living proof that you really don't need it. So if you want to, sure, go ahead and use it, but there's absolutely no requirement in our training. So just looking off this, I know that there's a strategy number 4 buy signal. There's the pattern I'm looking for that we teach you in the course. And if we apply the PET D, it is confirmed. So that's a dynamic duo buy signal, 30 points in Microsoft coming into last week in July, okay? Now, why would I need to know the earnings, or why would I need to know what's going on economically? The market told me everything I needed to know right there, just off those 6 bars. How about this example, all right? This is Intuit. Obviously, we've been going up. Once again, you say to yourself, well, Steve, you're right. We're in an uptrend, okay? We're above the 50 period. I'm not going to fight you there. But gosh, we've gone up so high, and it appears to be overbought. I can't buy up here. This is just too hard. Well, if you don't want to, you don't have to. But a strategy number 4, buy signal, was generated right here. That's where the pattern is. We're above the 50, and the pattern was generated. And it's confirmed. Not only is the bar above it green, but all the bars are green. So that's a pretty good sign that we're still in a very strong upward move. And you still could have squeezed out 35 points out of Intuit in the next week coming into July. As we look at JD, okay, JD.com, we have 2 sell signals generated right at the top. Now, these may be great signals, but for all we know, it's going to go right back up because most likely it's in an uptrend. But if we click on the PET D, Nope, they're both confirmed. So this was in April. We had to go back because we haven't had a lot of sell signals as of late. And we made a quick 12 points potentially. I know some of you are saying, well, yeah, Steve, I would have had to get out right at the bottom to make 12 points. Okay, let's say you made 8 points. You make 8, let's say you made 5 points. It's still a nice trade in about a week, right? So you say to yourself, okay, well, I'm going to wait. Maybe I'll get another signal on the buy side. So you wait a little bit and it starts to go up. But look what happened. Strategy number 4 generated another sell signal. So if you missed the first 2 right here, it's giving you a chance to get back in. But remember we talked about consistency? Remember we talked about how not every trade will be a winner, even if it's a dynamic duo setup? Let's say this was your first trade. Look what happened. Once again, if you took a very conservative stop placement as your risk parameters, you most likely would have been stopped out with a 3-point loss. Not a lot, but it's still a loss. This is where traders usually like to play the victim game. They want to go sulk. They want to feel bad and sorry for themselves and say, this stuff doesn't work. Gosh, the first signal I take is a loss. This is where we say you always have to be very diligent and watch, because you never know. 3 days later, another signal was generated. And if you had been sulking in the corner, you would have missed that and not been able to make back that 3 points you lost and possibly some more, because potentially you could have made 11 points. So that could have made back your loss and then possibly some more. So this is what we mean by consistent, a 2 steps forward, 1 step back approach. Okay, let's look at this example here in the SMPS synopsis Inc. All right. Once again, lots of signals. Some signals are better than others. These are all strategy number 4, buy and sell signals. Now, obviously, the first buy didn't work out well. The first sell didn't work out well at all, but the last 2 buys worked out. How could we have filtered out the losing ones? Well, even though it's not guaranteed to work every time, there's a high probability that it will by simply applying the PET-D. Remember, in order to take a buy signal, the bar above it has to be colored green. So we look at this first buy setup here. What color is this? It's outlined red. So are we going to take that? Even though it went up for 1 day, it went right back down after that. So not a very good setup, but we would have taken it. We then also would not have taken this one. In order to have a sell signal, we need to have this colored red, and it's colored green. So we automatically were filtered out of these wrong trades here. But look what happened here. We had 2 buy signals. They were both colored green, so we could have taken either one and potentially captured 25 points. Now, do you see why the dynamic duo is one of our most popular courses? Because it's so powerful and it can really help you. Let's look at this example in Apple. This was in June coming into July. Here we have, once again, a sell signal. Now you say to yourself, okay, well, this is a valid sell signal, and it looks like we're rolling over. I'm excited about this. Maybe you bought the puts. You're all excited, and then this happens, okay? Now, if you were just trading with strategy number 4, you would have been stopped out. But if you had the dynamic duo, you would have applied that and seen that you should have never taken this trade. Why? Because a sell signal needs to be colored red. So you would have never taken it and therefore never lost. Remember, as I said before, some of the best trades are actually the ones you never take. All right, let's look at the process one last time before we go into some other markets here. Let's say we were looking at Amazon. This was just 2 or 3 weeks ago, coming into July. Once again, someone looking at this the way most traders are trained would say, Steve, there's the institutional selling. Look at that. We can't get through there. I know there's a lot of institutions selling because that $10,000 course I took says they're there. And I most likely, if we rally up there again, I'm going to be a seller because I want to be in sync with the institutions because they've got the big money behind them. They're never wrong, right? Okay. Once again, this is how we usually make our decisions. But if we apply strategy 4, click on signal arrow to check our work, we would have seen that on the 28th of June, it's about 3 weeks ago, there was a buy signal at the very bottom of that range there. So you say to yourself, well, I don't know if I want to buy in going against the institutions, but remember, you're free to do whatever you want, but I wouldn't listen to the institutions more than I could trust, someone who's been trading for a couple of days. They had the worst track record of anyone I ever traded with. So I don't understand why people would think the institutions trade are someone I should depend on. I would rather listen to the market because it's telling me what it wants to do. Remember, the market tells you just about everything you need to know. So here's a buy signal. Now, in order to make it a high probability setup, let's apply the PET-D. Click that on, and if the bar is colored green or outlined green, then that's a high probability dynamic duo setup. Yes, it was, okay? Even though the bar before it was red, it makes no difference. We're only concerned with the bar above the arrow. And look what happened. Now, this was a daily chart, but in the next 7 weeks, or I should say 7 days. In the next 7 days, that's not weeks, that's days. In the next 7 days, you could have made 310 points potentially. So this is how simple it is to trade with a dynamic duo. But I know not everyone trades stocks. Some people like to trade intraday stocks, but some people also like to trade other markets. So let's look at some dynamic duo setups applied to other markets and to other time frames. All right, here's a 4-hour chart of the dollar yen. Now this was just going into just about a couple of weeks ago, okay? We have here a buy signal. Right here, it's colored green, and potentially we could have made 95 pips. That's roughly over $900, close to $1,000, all right, just in about a day. Now, that's how much potential you could have made. All of a sudden, the market changed, and the sensitivity of the PET-D started changing the colors to red. Now, we had some buy signals here. Are we going to take these buy signals? Nope. Why? Because they need to be outlined or colored green, and they weren't. So we didn't take these, and we didn't lose anything, because look at it, kept going lower. Now, here's the pattern to the sell side. The pattern generated a sell signal, and it's colored red. So had we taken that one, potentially captured another 100 pips. So in roughly a time span of about a week, you potentially could have captured close to 200 pips. That's $2,000. Well, once again, let's say you only did half of that. So maybe you only made $1,000, all right? Let's say you only made $500, but that's not bad work for a week. And remember, you're not overcomplicating your trading. You're not sitting there trying to find out what's going on economically or what's going on with the dollar or the yen. It's just right here on the chart in front of you. It's so simple. What about E-mini traders? Here's a 15-minute chart of the E-mini. This was July 9th last week or a week or so ago. Once again, all of the bars are green, and we have a cluster of buy signals right here. You could have taken any one of these signals. Had you taken the first one, potentially you could have captured 30 points just in about 4 or 5 hours. Remember, this is a 15-minute chart. So that's roughly $1,500 you could have potentially captured. That's in one day, all right? Totally different market, totally different time frame. And lastly, Bitcoin. Here's a 2-hour chart of Bitcoin going back to the 12th of July. Now, when Bitcoin was going lower, a lot of people said, well, yeah, Steve, it's going lower, but look at this. This is some support right here. It looks like it's going to hold. That's some Fibonacci support there. So I think I'm going to be a buyer. So a lot of people lost money. Why? Because if you had checked the strategy number 4 signal, the pattern generated a sell signal. So why would you go against what the market is telling you it wants to do? Who cares about support and resistance? One trader's support is another trader's resistance. You know, I don't use Fibonacci. I don't use this because, remember, they're too subjective. Sometimes it works, sometimes it doesn't. I'm sure you've all seen the same results as well. So you had a sell signal on July 13th. This was just last week on a 2-hour chart. Now to confirm that with the PET-D, all you have to do is click that on, and we see that that sell signal was red. In fact, all the bars were red, but all we're concerned about is that. And on July the 13th, you could have potentially captured 1,500 points. So you've seen examples in different time frames in different markets, from currency pairs, E-mini futures, stocks, to Bitcoin. That's the versatility of the dynamic duo. So let's recap. First thing you want to do is apply a highly consistent strategy. Strategy number 4, it's a pattern recognition method based on a pattern that repeats itself over and over and over again in any market and in any time frame. It's highly consistent, but please remember, consistency is an awareness that you will have losses from time to time. Is there a way to filter out some of those losses? Remember, we're not saying all the losses, but some of them, yes, there is, by applying the PET-D. The PET-D is basically a translator. It translates what the market wants to do on a tick-by-tick basis. So it's translating whether that trade, that strategy number 4 setup, should be confirmed or not. A buy signal means that the bar above the arrow should be green. A sell signal means that the bar below the arrow should be red. When you combine these two methods, you have what we call our dynamic duo. Extremely powerful but simple way to trade. I use this on a daily basis. I trade this with E-mini futures on intraday trading. But remember, I showed you most of the examples on stocks. It can be applied to any market, any time frame, in any direction. And the beauty of all this is, unlike what I had to do some 4 decades ago, calculate everything with a hand calculator and on a piece of paper, we've made it simple. All you have to do is click on either Strategy 4 or the PET-D on the PTS Primo Charting Platform, and you'll see dynamic duo setups right there in front of you. So as we close here, I want to ask yourself, and ask yourself honestly, do you think these two methods can help your trading for the remainder of 2021? If your answer is yes, and I believe it will be, well, we have a great offer for all of you today. We're going to offer you our dynamic duo special, all right? Strategy number 4, along with the PET-D tool. You're going to get instant course access, detailed online instruction. And remember, I told you we furnish you with all different entry, exits, and stop placement, upwards of 7 entries, 7 exits, and 7 stop placements, so that you can choose which one makes you feel the most comfortable, okay? Now, you'll get these automatic buy and sell arrows if you like to apply them on your platform. Let's say most of the major platforms like TradeStation, Metastock. If you like that, you can have those as well. But here's the good news about this offer today. Remember I shared with you how simple it is to apply on the platform? Well, we want to also include 12 months of the platform. Now, our platform has so many great testimonials by traders, from traders who have been trading for ages to people who just started trading last week. They just love the simplicity of it. But usually 12 months of our platform will cost you close to $1,800. We're going to strip that away today. In fact, we're not going to charge you anything. We're going to throw in a full year of the platform absolutely free, included with this great offer, okay? Now remember, with the platform, you just don't get the PET-D and the Strategy 4 signals. You're also going to get a host of different things that you won't find on any other platform. These are things that I've accumulated from my trading on the floor. These are specialist trading secrets that you'll only find on our platform. You're going to get them as well, like the proprietary exit levels, like our strength of trend tool, which I developed with Pro Trader Strategies. And here are what I feel are the most important: the signal scanner and the proprietary exit levels, because they're one click away. You can scan for dynamic duo setups and you can check your work on the platform. For example, here's an older example here in DraftKings. As you see, a dynamic duo setup was generated. There was a buy signal and the bar was colored green. Now let's say you feel confident about this, but you're not sure where to get out. Well, you can use just one of our exit methods, and it's just on the platform. It's one click away. It's auto-generated. All you have to do is click on Strategy 4. Now in the drop-down menu, click on Range Extension Exits. This is one of the exits we teach you in the course, and you know exactly what they're based off of. And you see we have different levels to get out of. Now, if you're the type of trader like me that likes to get in and out quickly, you would use exit level 1 and exit level 2. If you're a more moderate trader or swing trader, you'd like to use exit level number 3. And if you want to get as much bang for your buck, we would suggest using exit level number 4, if you're that type of trader that wants to wait and stay in the trade a little bit longer. Here's the one thing we always caution our students, though, especially in the beginning. If price gets up to exit level 4, we would highly suggest exiting the trade entirely. Why? Well, let's say we exited right there. We made a quick 10 points. Look what happened after that. Now, this is auto-generated on the platform. You won't find this anywhere else, and it's just one click away. So this comes included with the dynamic duo package, okay? With a host of other things that I just don't have time to go over, and don't have enough room here on the page to list everything. Okay, so let's break this down. What exactly is this going to cost, and what's the great offer we have for you today? All right, if we purchased all of these separately, let's say you just purchased strategy number 4, that would cost you close to $700. If you just purchased PET-D separately, it cost you close to $5,000. And if you, once again, had a full year of the PTS Primo charts, that's close to $1,800. So altogether, you'd be spending close to $7,500, all right? Here's the great offer we have for you today. We're not going to charge you anywhere near that. In fact, the great special we have for today is a one-time payment of less than $500, $497, and then just $97 a month. That's it. Think, you don't have to come up with nearly $7,500. It's just $497, a one-time payment, and just a $97 per month payment plan. That's it. It's so simple, and you can be up and running as early as today. Now, we have a lot of people that say, Steve, I don't want to have a payment plan. I'm ready. I'm sold. How can I just purchase it? Do I have to spend $7,500? No. If you're ready to just buy and say, listen, I want this, I want it now, well, we're only going to charge you for the Pet D, and it'll just pay in full at $49.95. You'll get the full year of the platform free. You'll get strategy number 4 free, and we'll just charge you for the Pet D. So either way, it's a great, great discount. Think of it, less than $500 to start yourself off, and then $97 a month. This is a great way to start taking your trade to the next level, because there are only 5 months remaining in 2021. You owe it to yourself to finish the last part of the year in the right direction. I can't think of a better way and a more consistent way than becoming a student of mine in the Dynamic Duo course. So here's how to take advantage of this. My sister site is Pro Trader Strategies. I developed the platform with them. They're in charge of all the discounts as well as tech support on the platform. I would contact them if you want to establish a payment plan, and I would suggest the easiest way to do that is by calling them at 310-598-6677. They have trading consultants manning the phones right now. They would be more than happy to take your order over the phone. Or if you just wanted to ask some questions about the payment plan or some more ideas on adding to the Dynamic Duo, they can give you some quotes. They're very flexible. They'd be very willing to work with you. Now, that link you see at the very bottom is the info page link. You can see that in the chat box, we have posted a live link. So you can click that on in the chat box, and it will automatically take you to that page, okay? As I stated, I would answer the questions at the end. We roughly about 5 or 10 minutes left. If you have a question, go to your question and answer box, type them in, and I promise I'll answer them to the best of my ability. Remember, if you have a tech support question, data or just in terms of running the platform on a specific computer, I would contact Pro Trader Strategies at the phone number right there, or you can email them. There's absolutely no obligation. They're not going to try and sell you anything. They'd be happy to work with you or answer your questions. But anything concerning what I just went over today, like the teaching and trading of the strategies, which is my department of the company, feel free to ask me right now, okay? I'll open up the question and answer box. Someone is asking, I think you might have entered a little bit late, to say, can I apply this to futures? Yes. As I stated, I use this with futures. I predominantly trade E-mini futures, and I used it this morning. A couple of good trades this morning. Not a lot of movement, but still they were positive. They worked out okay. And it's very simple. There's nothing different that you have to change, okay? So it's not something that, well, this will only work with stocks. If you want to trade currency pairs, you have to get a completely different program. It doesn't work that way. It can easily be applied to any market, any time frame, and any direction. Let's see. This is probably the most common question I get. This is on the info page. I won't go back there, but I'll just say it. On the info page, it said educational correspondence. Okay, this person is asking, what exactly is that? Well, it doesn't mean that I'm going to fly out to your home and correspond with you or sit next to you. But what it does mean is that you'll get my personal email address. All of my students have my personal email address. So I'm happy to say we have students in over 115 countries in every state, and they all have my email address, and they can contact me whenever they'd like. I was answering questions this morning from students. I answer them over the weekends, in the morning, before the market opens. And so if you ever have a question, or if something didn't make sense, if you're not sure exactly how to proceed, you can always email me with a question, and I'll be sure to get back to you as soon as possible. So that's really what it's like to have your own personal mentor. I know a lot of websites say you can always email, but most of the time when you do that, you're pretty much emailing either a salesperson or a intern, and you're not getting it right from the source. So these questions concerning trading go directly to me, and I alone am the only one that answers them. So anytime you have a trading question, you'll be able to contact me whenever you'd like, because we have, like I said, we have students in Europe that contact me all the time via email. Any more questions? These are good ones. I know someone asked the same question before, so that's already been answered. Okay, I guess everyone really is sold and they're ready to become students of mine in the Strategy Number 4 course, along with the Pet D. Now, one thing I want to say, remember, these are two things that I have been using for over 4 decades. In fact, the first strategy my mentors taught me was Strategy Number 4. And then when they saw that I was ready to go to the next level, they introduced me to the Pet D. But at that time, it was something I had to calculate. I had to, calculate on a handheld calculator, and then I had to write everything down, and it was just so cumbersome. Now with the platform, it is so easy. As you just saw, it's one click away. I'm getting another question here. Can we use this with forex? Yes, you can. If you recall, I showed you a 4-hour chart of the dollar yen where this worked beautifully. So this can also work tremendously with the forex. We have a lot of forex traders who use it with the dynamic duo, and it works great. In fact, in my opinion, sometimes these work even better with forex markets because they trend so much better. So you'll be able to see these really momentum setups before they pan out. Do you also have this system for a MetaTrader 4? Yes, I believe they do. I know we have it for TradeStation, Metastock. I know it is for MetaTrader. I'm not sure of MetaTrader 4, but that would be a question just to contact Pro Trader Strategies. Once again, they're in charge of all the tech support. They can answer that better than I can. And you can either email them, or I would highly suggest just calling them because you can find out right away. But most likely they do, because I know we have that. We have it for NinjaTrader, even Thinkorswim, Sierra Charts, just about all of the major platforms out there. TradeStation, I think I may have said that already. And sometimes there's just a few alterations that need to be made for the separate platforms, but we have a great tech support, and they handle all of that for you. So they'll take care of it all for you, so there's nothing you really have to do on your part, okay? Do I need to use the weekly time frame only? No, you can use whatever time frame you want. I personally like to use this on 5-minute and even tick charts, so it's up to you. Remember, you are in charge of your own trading. You're never going to hear me say what I think the market's going to do or what I think the perfect time frame is for you. That's for you to decide. Now, we have some traders who trade the dynamic duo. They say, Steve, this works great on hourly bars of currency pairs. I'll say, okay. And then others will say, no, Steve, it works fantastic on weekly stock chart. So how can one be great for one and one for the other? It's because you have to make your own decision. Remember, our goal is to get you to decide what works best for you. As I said earlier, no two traders should ever trade alike. You should never mimic or copy what someone else is doing because they have different risk parameters. Sure, somebody maybe can sleep well at night knowing that they have a $10,000 loss, where someone else couldn't take it knowing they have maybe a $500 loss. Everyone is different. And so we provide you with all this different information, and we work with you so that you can make your own trading decisions. That's where we differ, because we're really trying to educate you. We're not just trying to sell you something and say, just come to our chat room and do the buy signals that we do and sell signals that we do. That would be really doing a disservice to you, because most likely you'd lose money. Remember, the entire industry is based on that premise. And if that works so well, why do 80 to 85% of all traders fail? It's obviously because it doesn't work well. So our job as an educator is to provide you with things that work and then help you along to help you make your own decisions so that you can feel comfortable making your own trading decisions, okay? And we go over this in vast detail in the course. And with my private email address, you can ask me whenever you like questions, and I'll steer you in a direction that you may like, okay? Great question. So as we close here, I want you to take one last look at our disclaimer. And I just want to say thanks for taking time out of your Wednesday. I hope you learned something. I hope you saw the power and the simplicity behind the dynamic duo method. But more importantly, I really look forward to all of you becoming students of mine with the dynamic duo course. Thank you so much for attending today. I wish you luck in trading, and I hope you have a great Wednesday. Thanks a lot. I'll see you next time. Bye-bye.